Hi, Epstein with the Morning Flash Update for this Friday, the 3rd of May, 2024, 8:15 a.m. Central Time. Let's go right to the day's action and talk about that. Non-farm payrolls, 175,000, well under the estimate, at the lower numbers that I wrote about last night. I gave my subscribers some variables: 240 center line, 175 bottom, 275 to 300,000 top line. This comes in at the bottom line. Then we have to take a look at the unemployment rate, and it went up 1/10. So we take these two together, and why does that say April, December unemployment rate? Well, I don't know, but I just copied what was theirs. But when you look at that, I'm sure it's the April, 3.9%. When we look at March revised payrolls, they were a little bit higher, but February's were down a little bit. They revised the unemployment rate for March, not at all on that. The April private sector, down about 60,000, down quite a bit here, as you can see, 63,000 in the government payrolls. We held on to the participation rate. It didn't go anywhere. And the earnings, well, they're not as high. They expected up 0.3, they got 2, and the average hourly earnings year over year was 3.9. So the traders are going to cheer this. Now you'll say, why? The numbers aren't as high. Because it means that the Fed is getting the first set of numbers going their way. Yes, there could be revisions to it. It's the first report. I think they need 2 more like this. And 2 more like this puts into the market where the Fed will probably leave the data and get ahead of the curve and open up the door for your first cuts. So that is what you're going to hear in the marketplace. 175 is still a relatively historical good number. Remember, all the migrants are coming in, but a lot of them did get the jobs for the spring. It is April. We saw that happening starting in March and so on. So yeah, I think the market was looking for a bigger number, but I think that's offset when they're looking at the hourly earnings that aren't up as much. Now we'll go back to productivity on the next report and see that that's holding up or not. We get the S&P Global Group final April service sector PMI. That's coming out in just a little bit at 8:45, and we're going to get the ISM coming out at 9 with their service sector indices. So as you take a look at the market, you surged on this in the stock market. You went up 100 more. You were up 547 here. You've sold off 10 points. You were up 63 points in the S&P. The NASDAQ is sold off, not much, only 40 points. And because you've been going up and holding in the Russell, it's not up with the rest of the market. The gold market certainly overdid this. It moved from 2303 up to 2330 and right back down on the report. Silver's down. I don't think you're going to now hit in the copper market the lower part. I think that the copper market might have said to you with this rally, if it holds anything like this today, that okay, we're at that point in time where we've had a correction. It's past tense. Dollar sinks on this type of news. Why? You're putting back into play rate cuts. And if you put rate cuts back in, you're going to get initially a bid in the other markets against it, and it's exactly what happened. In the grain markets, more short covering going on. Bonds and notes, the whole curve yield. You're seeing interest rates fall. Traders will cheer that on. Mortgage rate money, everybody's going to get excited for a bit. You've got to still get another report like this, but don't walk away from this thinking that, it's a one-off. If this is the beginning of a trend, you're at then the inflection point where the economy's starting to roll and the Fed wants to get ahead of it, and you're back into, is it 1 or 2 rate cuts for the years? I told you, I'll be data dependent for another report or so, and once I see that third coming out, I'm there. But it's got to be where you don't get 175 and you jump back to 240 and then down. That won't do it. Pretty flat on the energies, war premium out. We know that the Hamas leaders are back in Egypt talking about what can they do, and what they're trying to do is find a way to end the war. And that becomes the very important thing. I don't know what Israel will or won't accept, but I know that Hamas is going to be under pressure by everybody. You've got to end this, and then we can go to Israel, and what do we do there? And it's still very complicated, but you're into a pause, and that's the interesting news, and that's why you're under pressure in these markets. In addition, if you're rolling over in employment and so on, it's not too bullish on the oil right here. It means a little bit of a roll here in these things. We're going to be writing about that all morning. So the Linn Group will be coming out with their research. So whether you're a grain trader looking at this time of the year, the meat markets, which you saw soar yesterday, you're now looking at the soft markets coming down, cocoa, coffee, absolutely. That big run-up is run its course. That is the way to look at it. The energy markets, what's going to go on now with the Middle East, and of course today's action in the financial markets, we're going to wrap that all up. So why not take a look and see what we write about, be it options, the spread markets, the futures markets, and cash markets. We cover it all, special reports, charts of the day on our price counts. I'd like to give you a free sampling if you haven't tried what we offer you. How do you get it? You go to our website at iraepstein.com under free offers. You can move your cursor up here. I'll be with you either late today or first thing in the morning. Let's see how the day goes with your market wrap-ups as we look at the weekly charts and review what this report did by day's end. You have yourselves a good morning.